So yeah, Ryan, we're going to talk today about tokenization.
Okay.
So in short, tokenization is simply taking something either tangible or intangible and giving it a digital representation. And this is a big deal for one reason primarily, and that is liquidity. You can tokenize anything around the world. You can tokenize US stocks, which means anybody in the world could in theory have access to the US market, which doesn't happen right now. It's kind of an elitist market. It allows for for shared ownership and historically very illiquid assets like buildings, high rises. You could tokenize a Sears Tower and give, maybe 1,000 shares represented. Everybody can own a piece of the Sears Tower, or more realistically, a warehouse that nobody wants in the middle of nowhere, which is very illiquid. It's a massive injection of liquidity into the entire world.
So when we talk about tokenization, we're not talking about tokens in the sense that we're familiar with a lot of different crypto projects that have ERC20 tokens or have tokens that exist on other blockchains. We're talking about the tokenization of assets, of real world assets.
Of tangible and intangible assets. Any assets you can imagine can be tokenized.
Okay.
People can be tokenized.
Interesting. Well, we won't go there, but when I think about, the biggest real world asset that's tokenized today, as you alluded to, a lot of people instantly think about real estate, fine art, commodities even. We're starting to see gold represented on chain. I think Bitcoin itself is a better representation of that view as an investment. That said, the biggest real world asset that's represented on chain today is
stablecoins.
US dollar.
Fiat currency. Yeah.
Exactly.
Yeah, by a huge margin. I think we're going to show some slides in a little bit, but I think like 95% of all tokenized assets are stablecoins, just because that is the only stable environment. That's where you put crypto if you're not using it. It's where you put crypto if you're doing half of the liquidity pool. It's a respite from the ubiquitous volatility in crypto.
You need that fiat representation on chain. If you become more and more blockchain native, you participate in various protocols, use different applications, you're likely to use stablecoins. And stablecoins, as you mentioned, are by far and away the largest by market cap when we think about real world assets on chain. We're going to look at that in just a second, but I want to move into the other sorts of assets by market cap that are now starting to grow on chain. We only have about 4 years of data. Obviously, prior to this, these things didn't really exist. They certainly weren't represented on chain. We've removed fiat collateralized stablecoins from this view here. And anyone that wants to check this out, you can go over to Dune Analytics. They've got a tokenization overview. There's a ton of great charts on the dashboard. You can manipulate the charts. You can filter different chains, different assets, and so on. But what we're looking at here is tokenization market cap by type of asset. And so you can see that while stablecoins have been removed, commodities are starting to grow in size. Government securities make up a very large chunk.
Those have just been taken off over the last year or so.
Well, when I think about smart contracts, I think I shouldn't say it's easy, but it seems straightforward in terms of representing debt obligations on chain. That is pretty straightforward. And so I'm not surprised at all that you're seeing fiat on chain is the biggest. Second to that, debt that's fiat based on chain. Yield generating, right? We're talking about packaging up US Treasury bills and tokenizing that, representing that on chain, and that yield being passed through to the holders of those tokens. And a lot of this is not available to retail investors when we think about what's happening. But what you're seeing is large institutions, BlackRock's one of them, household name, it has become at least in crypto now, that is packaging up securities and then representing them on chain and just running this whole process, all of the infrastructure essentially being directly on chain, a little bit more efficient, as many would argue.
Yeah, no, absolutely. I mean, it's one of those things that just makes sense. The smart contracts most of these, we're going to get into that shortly, but they're saved on the Ethereum blockchain, which has the most nodes. It's generally considered the most secure and robust blockchain in existence. And when you save and execute smart contracts on Ethereum, like you said, Ryan.
Yeah, let's look at that.
Yeah. What's growing in the tokenization world? So we can see Ethereum has the lion's share. That's kind of like that orange at the bottom. I would have thought Solana would have made some more progress on here, but it hasn't. Ethereum is still pretty much dominating, isn't it? Which is good because I own a lot of Ethereum.
Yeah, I think when we're looking at this, though, it's important to remember that stable coins have existed on Ethereum for
That's
the
a
most
good
part
point.
first, right?
Yeah, yeah.
And so we don't have a very long timeline. We have USDC, we have ERC20 stable coins, we have USDT, Tether. And we, up until really the last couple of years, didn't see any other real world assets, at least in size, that were represented on chain.
Yeah.
Only stable coins. Then you start to see some debt instruments. You have US treasuries, money market funds moving on chain. So it's still very, very early days. But I believe that this is going to be a key theme of this cycle. I mean, it already is, obviously. We're talking about it. You're seeing the growth in the space. You're seeing a lot of projects that we'll talk about in just a second that are participating in building on chain here. And so I'm not going to be surprised at all to see the growth, I think, of credit on chain, corporate debt, the issuance of different debt on chain. Obviously, treasuries are there. You're going to see funds packaged up and represented in a tokenized form. And then, as we've alluded to at the beginning or talked about, real estate, fractional ownership of,
Right, and that's down the road. That's not
of
even
the cash
really
flows
happening
that
today.
kick off there, right?
Yeah, right. It's what probably will happen. Even if you think about, we talk about fractionalized ownership, but even just tokenizing a home, an individual home.
Yeah.
Like I recently bought a home. You end up paying, 5-6%, and the seller's fees, and it's just asinine. And the paperwork that goes into getting a mortgage, and which is a different story altogether. But it's a lot of unnecessary paperwork and time and money spent in buying a home.
You think some of this moves on chain over time?
Yeah, I think a tokenized home was sold in Florida. I think last year, maybe 2 years ago.
What about equities?
Well, I mean, that goes back to, I think obviously me and you wouldn't be too interested in tokenized equities because I can buy any equity I want.
We talked about that the other day, right? Like as a U.S. investor, you're privileged in that you have access to all these investments.
That's why I think that tokenization is going to be a real catalyst to a true globalization. Which I think personally is a bad thing. I think we need to diversify the world's risks.
Okay.
But some people are pro, the world coming together, and I can't think of anything.
New World Order, Mike?
Yeah, maybe even a New World Order.
That?
Well, I mean, think the whole world's on one currency. There's a problem with the currency. What happens?
Yeah, well,
who's going to bail the world out?
We kind of are on one currency, the U.S. dollar,
for the most part. But
another show, another time.
Yeah,
over a beer or something.
But yeah, so. I think it's going to have a lot of value in the future because anything can be tokenized, which means anybody can access it because blockchains are decentralized. The government does not control them. So I wouldn't think it'd be unreasonable to assume that in 10 years from now, most of the shares of what do they call them, the Magnificent Six or Seven, maybe held maybe held by citizens, global citizens outside the U.S. Because that's a big market. There's a lot of money in America, but it's not 50% of the worth of the entire world. It's much smaller than that. So this is just going to open up liquidity. It's going to open up accessibility, and I think it's ultimately going to be a very good thing, and it's very promising as we can look at these charts just from the last year or so, how it's taking off.
Yeah, I agree. I think this is the tip of the iceberg. Clearly, we have no predictive abilities.
Yeah.
I don't know what the timeline is. But I think what we're trying to show here is that this has started. It's not going backwards. We're going to see the continuation of the tokenization of real world assets. Not everything is going to be tokenized. Some things don't make any sense. But there's other areas where there's clearly an opportunity. Stable coins, debt instruments, we're starting to see that growth. Let's talk about how you can trade it. How do you play this, right? I want to make some money. Is this a macro trade? Sure, I can participate in the space by holding USDC. Depending on where I hold that and what I do with it, I can generate a yield off of it. Fantastic. But how do I make money in the growth of the ecosystem? Is it simply just the macro trade is Ethereum, more adoption, more use cases, more users, the value of ETH goes up? Or do you look at individual projects? We do have some projects or some things that we can talk about here in a moment, but how do you think about that?
I mean, I would say Ethereum. As we looked at the blockchains that have the most participation in this space, it's 85% Ethereum. everything else is sort of a gamble. But again, Ethereum can be compared to the internet. Ethereum's always, in my opinion, going to be around, just like all the Web 2 apps are built atop the internet. Everything that happens in decentralized finance or Web 3, today at least, is built atop Ethereum. So you buy Ethereum, and I think it's a pretty safe, relative low-risk way to participate in this space, in every space in Web 3.
Yeah, I've used this analogy. I've heard this before as well. I mean, you go way, way back all the way to the beginning of ETH. And a lot of people used to talk about it, or maybe they still do, as the oil to the machine.
You're right.
If this is a machine, ETH, you pay gas fees in ETH. That's the oil that runs the machine from a commodity investing perspective.
Yeah.
If we take that approach, more people demand oil to use this machine. It powers the machine. The value of that, all else equal, should go up. And we've talked about the illiquid nature of Ethereum supply, given the burn mechanism. We've talked about how, and we can get into the ETFs, which just launched yesterday as well. Not quite sure where the flows are. Maybe they weren't as high as expected, and so that's driving price. I have no idea, but we'll look at that. But
and Ryan, real quick, you asked me about possible good investments to make in tokenization. I think another one would probably be Chainlink, because when we're talking tokenization, we're talking an intangible or tangible real-world asset that has to be, which is stored on the blockchain. But how do you get that information, that data?
You're talking about Chainlink as an oracle, a data source,
right.
really.
So
right?
that's
what is the value of that home in the real world?
How do they get the live information over it? So you have to pay Chainlink to do that, and they provide tamper-proof vaults where this information is stored to make resolutions on certain outcomes or representative prices. If I own a tokenized version of Netflix, how do I know that it's actually trading at Netflix's true value? Well, an Oracle or Chainlink or a different Oracle will go out and they'll look at the price on maybe 7 different exchanges, and they'll do the average or a summation of the different prices, and they do that work for you. So we know that our asset is always going to track the real world asset.
I like that idea. There's a lot of ways to play it. I want to jump into some of the different projects here that are related to tokenized assets, real world assets on chain. A few of these we've already hit on. Then I just want to draw everyone's attention to market cap on the far right, just to get a sense and put some context around this of how big, or in some cases how small, some of this is at this stage. So we talked about the biggest real world assets on chain being stablecoins. Tether, the company behind USDT, US dollar Tether. Circle, the company behind USDC, which many people here in the United States, I'm sure, are probably more familiar with or maybe more likely to use at times. There's the market caps, 54 billion. Tether is the biggest by far. Beautiful, fantastic business. I think stablecoins as a business, it's amazing. Wild that the banks aren't just smashing the door down to get into this, but maybe that happens over time.
I mean, JP Morgan, I know, has started a tokenization project. A few other ones too.
Well, Circle and Tether are the biggest. You have First Digital, Paxos. We've talked about. They've been involved with stablecoins at times, commodities as well. They've got the gold-backed token. But you also have Securitize. Securitize has been powering or working with BlackRock on its Buildle fund, which is, again, real-world assets on chain. Ondo, another platform that's not necessarily always accessible for individuals or retail investors here in the U.S. at this stage, given a lot of the regulatory uncertainty. I think that changes over time too. But these are some of the protocols or the companies that are behind a lot of what's happening here. Ondo has a token, ERC20 token on Ethereum. You can invest in that. You can purchase that. Obviously, you're purchasing it because you hope it goes up in price.
ONDO, right?
Yes. Yep.
That's up 500% on the year.
Okay, so I mean that's worked up into this point, right? We've talked about this as a narrative. To realize those gains, you have to sell at some point too. Obviously, many times that we've seen, some of these things pump and then they dump. Not saying that at all about Ondo, but just in terms of what's behind it, it's largely at this point, it's narrative driven. You're seeing activity, you're seeing partnerships, you're seeing a lot of positive catalysts. You need those things to continue. Our view is that it's still very early and it's likely to continue. These are some of the ways that you can get exposure. Centrifuge, there's a wrap version of that. It's wrapped, Centrifuge, WCFG.
Oh, I didn't know that.
Yeah.
WCFG.
Then there's a couple others that we don't have up here. We can only fit so many on the screen. There's a lot of projects that are involved in this space. If you go to the Dune Analytics dashboard that we mentioned earlier, you can see some of this. but you have others like Goldfinch, you have Maple Finance.
Yeah, Maple's a big one.
Right. I mean, look at the chart of Maple. It's straight up in the last couple of weeks, literally straight up.
Is it really?
Yeah. It's been
MPL.
a good one. Yeah, MPL. And so there's a lot of ways to trade this theme, to play this theme on both sides of it, right? And so if you believe that this narrative is going to become more prevalent in the market, you're going to see more capital allocated to this, more people participate, more actual use cases that are developed, and clearly that's what we're seeing in the data. You know, the rate of change matters. How quickly does that continue to grow? We'll see. But these are some of the ways that you can get exposure to that. The other way being simply that most of this, again, is happening on Ethereum. ETH is the macro trade, in my opinion, as you called out.
I'm looking at a chart of Maple. I looked at the was it Centrifuge one as well. And these cryptos, they go from 5 to 20 over the course of 6 months, which is pretty normal. And I think a great way to approach crypto.
5 to 20 is pretty normal.
It is in this world. We don't know what's going to happen, but it's not wise to buy the top.
No,
obviously,
no. If you can identify the top, don't buy it.
Well, here's the great thing about crypto is we know there's going to be a new low in the future. Maybe not as low as the previous low, but it tends to.
It's going to be volatile.
It's like an ascending mountain range. Yeah. So if you don't,
the stuff moves.
If you like it, it tends. So I think that the way to be profitable in the space is to really understand it, to be following these protocols, see what they're doing, read up on them, understand their current price, and then maybe in 6 months, maybe they're 70% off the highs. That's when you come and you buy it.
Right.
Because it probably will happen. I mean, I told you, with the AI token 6 months ago, you said, Mike, are you buying Tau? And I said, no, TAO is one of the biggest plays in the AI crypto space. And it was trading at $600-$700. And I said, I'm going to wait for it to get down to $200. And it's at 330 right now. I got close to 200 a couple of weeks ago. But
yeah, I see that.
just wait it out, because you're going to have another buying opportunity. It might not be today, but just know your stuff and don't pay too much, and you'll do well.
Yeah, I think you're right. I think people are absolutely right to question market cap here of some of these things. Right? We've talked about the importance of looking at data that's available either through the tastycrypto wallet or through CoinMarketCap.com, but just looking at how much supply is coming relative to what's currently available to trade in the market. When those token unlocks are likely to occur, when they're scheduled to occur, because that can change things very, very quickly, right? If you have a token that it was, let's say, heavily invested in by VCs, and those unlock periods are coming, it's very likely that given that liquidity, that availability, they're going to dump it. Relative to where, you might see that the chart is down significantly off of whatever its recent high was, but wherever these investors likely were allocated at was much, 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 much lower than where it even is today. And so there could be continuous sell pressure for some point in time. Just pay attention to that stuff. I'm not calling out any individual tokens or anything like that. I think for the month of July, it was known that there were some very big amounts of token unlocks that were occurring, some of the L2s, for example. Just be aware of that, right? That is going to drive some volatility. There's ways to trade that. We can talk about that in more detail on another show. But you got to pay attention to the details is the point. Know what you own here. Trade it with a bit of patience as well. And just understand that some of these things that we're talking about, they didn't exist last year.
Yeah.
Right? These might be short-term trading opportunities.
And more than half of them won't exist in 3 to 4 years from now.
It's entirely possible, but the space is not going away. There will be new opportunities. I think it's going to be, there's going to be continuous opportunity in here. It's just staying on top of everything, which is tough to do at times because it moves very quickly and there's a lot going on.
It's positioning yourself in a diversified way to be there when it does happen. Ryan, do you know when the first email was sent?
I don't.
1971, I think, right? Now, how long did it take from that first email, from the technology being in place, for it to take on where actually computers were used in offices and schools? It took a long time, more than a decade for that regular use of computers. Now, blockchain has been around for over a decade now.
Hopefully it's moving a little bit faster than that.
Well, I don't think it is. If you look at, when did Bitcoin, when was the white paper written?
Yeah, I think it was '08 or so.
It was a while ago, but I think if this space is going to take off, and I think there will because it's simply too efficient for it not to.
Yeah.
You have to be positioned right, and once the world does make that transition, you want to be in a couple things, even if it's just a little bit of your portfolio. You want to be positioned for that move, for that new internet to take off.
Look, you've done the work around portfolio allocation, and at least, as of recently, how does investing in just a little bit of Bitcoin specifically impact your portfolio? And we had a hard time finding that there was any negative impact to it.
I
right?
mean,
the traditional 60/40 portfolio blew
Yeah.
up because of the equity or the bond position. Excuse me.
Yeah, I mean, it's in my opinion, it's a brainless investment. You don't have to think about it.
Sure.
You have to have some. It's an uncorrelated asset class.
Look, I mean,
That's all there is to it.
objectively speaking, it can go down 80%. It can go up 500%.
Yeah.
Historically, it's had more upside than downside. It's had that asymmetry to it. That's what we look for. I think a percent in your portfolio is a fair allocation. I don't know.
Yeah.
We're proponents of it. We've been in it for a long time, so maybe we have a skewed view there. But
If it drops-
seemingly is continuing to grow. There was massive inflows into the ETFs just last week.
Yeah,
Continuing to see that.
Ether is starting to show a little bit of promise too.
Let's talk about the market for a second, Mike. ETH has underperformed here following the ETF approvals and the launch of trading, which was yesterday. I don't have flows in front of me. I'll see if I can pull those up. But let's just look at
107 million inflows on the first day.
okay,
Alone,
which
was
is
yesterday.
relative to everybody's going to compare this to Bitcoin, best ETF launch of all time. It's still that's still a lot.
I mean, Bitcoin had 4.6 billion.
Yep.
Versus Ethereum, which had what I say.
100 something.
Yeah, so I mean, it's like a quarter of Bitcoin, which is exactly better than I thought it would be. Not everybody knows about Ethereum. Everybody in the world knows about Bitcoin.
Yeah. Well, it's it's been trading for a day.
Or I said a million, 107 million. Okay, so that is a lot less. I thought it was
not
good.
a quarter. A quarter would
That
be a
is
billion. Right?
so 106 million versus 4.6 billion. That is a shortfall, but
Well, it's day two.
it's day two.
That said, I've got a spot price of 65,651 right now. When we ran these numbers, we had a spot price of 66,000. Bitcoin hanging in there in positive territory on the week, up a little bit on a rolling 1 month basis. And given just how volatile these things are at times, you see those monthly numbers change quite a bit. The weeklies, obviously. ETH is the relative underperformer. Solana is the relative outperformer. I've got a price of 177, so a little bit lower than 179 where we're at, and 3,400 was our spot price with ETH. Bitcoin volatility picking up a bit as well, so be aware of that. It's going to give you a larger expected move. The Bitcoin vol was really sticky in the mid 50s, and now we've seen on this up move recently. We traded as high as almost 69,000, 68.5, and so you're seeing volatility move a little bit higher. We know that vol and price typically move together here in these markets. It's the opposite of what we often see in equities, where the S&P's getting hit hard today. Obviously, you're going to see the VIX is up quite a bit. A little bit different in crypto. That said, when you look at whether anything has changed structurally, like to look at momentum, try to stay on the right side of the trend here. Nothing has changed in terms of the indicators that we look at. We look at moving average crossovers. Everything across the daily, weekly, and monthly time frame is still bullish. As that changes, we will update everyone. I've got some research, too, that I've been working on, Mike, that I'm going to present next week that just shows you how, when you follow that weekly indicator specifically and try to stay on the right side of the price momentum, you really can outperform, both by taking short positions where you can in the derivatives markets and simply just getting long and staying long when it's green, and then maybe getting out of the market as those signals change. The weekly is a little bit slower time frame, obviously. Pretty strong signal there. So we'll let everybody know once that changes. At some point, it will change, and you're going to want to be aware of that, and you're going to want to get out of the way. But for now, still structurally, everything seems to be intact. Looking at expected moves for the week, we're using the spot prices in the table above. I've got almost a $5,500 to $6,000 move, $5,775 for Bitcoin, give or take a few $100. $5,000 move is what you're looking for. 60.2 on the downside, 71.8 on the upside. Kind of takes us into that area where I think you can trade into, just given the way that this has been moving within the range. That'd be about the top of the range at 72. And then a $300 move for ETH, 3,000 on the downside if we get there, 3,700 on the upside. Again, an area that we've traded into and really haven't been able to break above. And we've talked about the relative outperformance of Solana. You continue to see that show up when you price it in ETH and you price it in Bitcoin. Solana has been the big winner on the week and certainly on the month. If you've been long Solana and short either one of the other tokens, or simply just long Solana in dollars, you've done pretty well.
You love Solana.
I do. I love the volatility, Mike. Also, just think, look, I mean, we've talked about this on a relative basis. Its market cap's like 80 billion. ETH is 400 billion. I don't know. They do the same things. Maybe it goes up a little bit more. Maybe ETH goes up a bit more. I think it's early, but yeah, I like the Solana trade. I could buy more of it. It's cheaper.
Buy some more right now. Load up. Ryan, I have to make a correction. I don't want the last thing I said on the show to be an error. I was researching on the fly. 140 million inflows into the E3 ETF on day one versus 655 inflows on Bitcoin. So that means Ether had 21.6% of the inflows, which is pretty good.
Which is Bitcoin. What a lot of people, ourselves included, have said we thought we would see.
Yeah,
25, 30%.
I said, I guess 25. So.
Which is about what the market cap of ETH is to Bitcoin.
Yeah. It's pretty much in line. Yeah. And given it doesn't have that brand recognition of Bitcoin, I think it's pretty good. So I just wanted to straighten that out.
All right. Well, as we wrap things up, Grumpy Mike, Joe, throwing out some comments, thanking you for your time on the show. Always enjoy having you on the show. I guess it's back to the lawn care business for you. Absolutely. It's been a pleasure, my friend.
Yeah, it's been fun, man.
It has been.
We'll do another show somewhere, sometime.
We will. We will. But until then, that's going to do it for our show. I'll be back on Monday with Frank Caberna. This is the Tasty Crypto Show. I'm Ryan Grace. He's Mad Mike Martin.
Peace out.
Peace.